Hello traders, the title of the video is how to read Wicks. W-I-C-K-S, Wicks. Alright. So the wicks are what I like to call the antennas above a candle, a stick, a pattern. Alright. So how do we read wicks, meaning the technical trader? Alright. Want to trade wicks, meaning that read it, mean interpret it, understand it, and use it correctly. That's the meaning of this question, to read the wicks, is to trade the pattern, the candlestick pattern that we call wicks a shadow. Some traders call it shadow. Some people call it wicks. Alright. I like to call them antennas. Alright. How do you read them? How do you trade them? As a technical trader in the financial markets. Alright. So if you look on this chart, we have a few wicks. There's one there, okay? There's another one there, can you see? Especially if you are using these wicks, you can use them on a monthly chart. Very nice time frame to find those wicks and read them. So the first thing that the wicks is telling us is that there are orders to sell somewhere at a specific price level. And those orders have forced the price to go up and fill them. That's why very often you will see the wicks. So in order to understand the wicks or to trade it correctly, you want to understand the market makers. The market makers are filling orders. They provide liquidity, okay, for the market. They want to fill orders. So at a specific price level, a hedge fund, okay, an institutional investor, or a bearish trader place order to sell the stock there. Because the stock has been going up, it's somewhere here, and those people think that the stock is overbought. Now, if there are too many orders placed here to sell, the market orders, with the market maker will try to fill those orders, bringing the price into that zone. As the price reaches those zones, the stock is sold as here. Okay. So the biggest, the person who sold it at the highest level was here. Somebody placed order here to sell. How do I know? Because the price went there and somebody sold it down. It went up all the way there. Somebody sold it down. Some people sold it here. Sometimes those orders we are trying to price, those orders will be filled. It must be filled, and the price goes there filled. So as they sold it, there's no more buyers. So there are only orders here to sell. All the orders are filled. Nobody's buying anymore. Price goes. Or probably the whole zone is filled with orders to sell. So different level to sell. So some people want to sell here, some people want to sell here, some people want to sell here. Or the biggest orders are here to sell, and the market price came here, sell, it start coming down. More sellers are coming in and selling it as it's coming down more. Or the person who sold it first here, you see it start coming down. You say, well, it start coming down now. They keep piling it, selling it more, selling it more, selling it more. And even those rally here, you see it went up a bit, they sold it back down. And some people may say, what a crazy way to trade in the stock market. This is what's going on in the stock market. Price will go up, okay, and it will become overbought. Some people will shut it down, then it will become oversold, and people will buy it again. That's why the price going up and down, okay? So the first thing you want to understand is because of the sellers, the order to sell at a specific price level, that brought the price to that level. As the price of this, as the asset is sold, there are no more buyers, and it come back down to a level before, okay, you may see few buyers. You see all these zones. You see where one thing you need to understand, where is the wick, the zone, no demand to buy at all. So price was going up gently. It's just going there to be sold. What a funny thing. And once he sold, nobody buying anymore. So he was going on, 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 going on. Some people think it's too overbought, and they sold it in this zone. All right? That's why we have the week. Now, the question is, George, how to read it. So I'm going to explain it to you what is going on first so you can read it correctly. Sellers are around. Now, very often, all right, sometimes the price may just go into a target level. All right, so I told you the first example, order to sell are placed in a specific level. Another time, the price is headed to a target level. So suppose, as I said today, the price does not go up for no reason. It's always going to a specific level. So, and a professional know that, and a hedge fund know that, and even trading algorithms are designed to support those price target level based on the principle that no price will move up for no reason. It's going to a target level, and people want to know, where are we going? So somebody put you in a car, start driving, you ask the question, where are we going, sir or madam? All right? Price doing exactly the same thing. So people know the target. So those who were buying in before, everybody buying a swing trading, buying, they know that the target is there. As it's approaching the target, those people start coming out. Bullish traders start coming out. So what the bullish traders are doing when they are coming out of the trade, they sell. You may say, your bullish trader also are selling. Yes, they sell when they're about to close a bullish trade. That can also create the wick. Prior reaching the target, everybody jumping out. Or prior going up, it reaches the target. Some people don't know. Some people buy here big time. So some people don't know where is the target. The stock was going up for some time. They say, I need to wait. I want to pull back. I want it to pull back first. They say, it's going up. Oh, I need to join. Finally, they close their eyes. All right, they close their eye. They close their ears. They cross their fingers, their leg, and they join everybody. But it was a bad timing. They are buying when the price was near the target. And then they see it start coming down. What do they have to do? They have to close those trades very fast because it start coming down. As soon as the body, they say, oh, am I the unluckiest trader? No. It's just because they don't understand what is going on. The price is always going to a target level, and they enter the market at the wrong time, very bad time, and they bought it at a bad place. Okay? So they have to close the trade, and those bullish trade, and they have to sell very fast to close it. That can also create this wick on top of the candlestick bar like this. So it's indicating to us a pressure. Sometimes it's not the price target, it's just a resistance. So it could be that there was a resistance at this level before. Here. Okay, here, look at this one. Okay, this one, here. Somebody sold it here. How do I know? Because of this candlestick bar here. So price went up to that zone, somebody sold it there, yes or no? At that point in time. In 2017, somebody sold it right there at that level, yes or no? Okay? So because of that resistance, because of the fact that somebody sold it here before, it's a resistance level. Look, a wick is formed at a resistance level. The market acknowledging that resistance, say, oops, somebody is selling there. So those that are buying here, they were not stupid. They saw what has happened here. That as it went up nicely, as soon as it reached the $10 level, somebody sold it. So they remember that. So as the price coming here, some people will come out here, will try to come out. It's not stupid. They are very, very careful, that's all. It went back a little bit above it, they sold it down. So that resistance still confirmed here. You see that shadow again here. Shadow, if I say shadow, you know that it's the same thing like wick. Wick or shadow or antenna, that's what I use. Yeah, again, another wick in the same, this resistance, that resistance, same level, $10 level. You see again, recently, when they got a little bit, not long one. The wick, when we are talking about the wick, we're talking about the long shadow. Those are the ones. Don't pay attention to the very small one. Very long. You see, this one is quite long. This is long also, okay? It's a very nice long one. Okay? So now I clarify what is a wick and how it forms. Orders be placed at a specific level. Market makers fill those orders, sell orders, okay? Or prior reaching a target level, everybody coming out, jumping out very fast, all right? Or some people entering a trade at a target level only to be forced to close it very, very fast. Or just because of a prior resistance level, can be horizontal resistance, can be a trend line, can be on the edge of the P42, prior acknowledging that key level, and blah, blah, blah. Or another level that you may see it also is Fibonacci key level. One of them is the 138.2% Fibonacci extension level. If you see a long shadow at the 138.2% Fibonacci extension level and a common center line is broken, implement a top-down trading method to sell it like a pro. So apart from the normal resistance trend line, watch out for the Fibonacci extension level that are hidden resistance level in an uptrend. All right, now you may say, Joe, how do we? You say how it fall? How do we trade it? Now a lot of traders combine the wick with stochastic. Why? Even on a 5-minute time frame, some traders are doing that on a 50-minute time frame. Let me see if I will see one example. You see? So you see here, this candlestick bar got a bit of wick, so it went up. So the first condition, the price must be going up first. So it's going up, going up, going up. Now you have that wick on a 50-minute time frame, and then they just play with the stochastic. Stochastic is overboard. Here it is, this one. Stochastic is overboard. But what you need to do, if you are playing down a 50-minute time frame, you want to combine it with a higher time frame. How do you do that? You go, for instance, to the daily chart or weekly chart or monthly chart. You draw all the key levels, and then you switch before you switch to your 50-minute time frame. All right, and then when you see that wick like this on a 50-minute time frame and the stochastic is overboard, do me a favor, please. Common center line is broken. Then you are scalping, selling it down. All right. So they trade it with even on the average time frame they play. So they see here, this is a beautiful. It's not very no. This is a different candlestick. This is a bearish engulfment here, but a little bit for weak, but that's not very long. I'll prefer it to be a little bit longer than that. Okay. Hold on, please. Okay. On a daily chart, you may see sometimes also this is a week again. So prior going out, the same thing we were talking before. You see, going out, so on the swing traders, so you see the wick, all right, must be in a key level. So that's what I said to you, piercing through a key level. So I talk about it at 2-4 stock trader. So the wick is a distinctive candlestick pattern. It must pierce through a key level. So usually you will see like this. There is a playlist about candlestick pattern at the 2-4 stock trader YouTube channel. You want to check it out. You want to watch everything. So you see that that's the wick, a long shadow piercing through a key level. All right, with that candlestick bar alone, not two, just one candlestick bar. There's one here. That's a wick there. See, you want it to be long, you see, and the stochastic is overboard. Common center line is broken. Implement a different time frame trading method to trade the break below retest. That's why this one open here went up a bit. I slow it down. That's a wick. It must pierce through a key level. I'm not going to repeat myself again. So you're going to go to, if it's not at the 2-4 stock trader YouTube channel, check the playlist there. Otherwise, you have to go to Day Pro Trader YouTube channel. But I think it's at the 2-4 stock trader. So the shadow or the antenna or the wick must be in a resistance zone. Can be a normal key level, can be a trend line, can be a pitchfork tool, edge of the pitchfork tool, piercing through the up. All right, it doesn't mean jump on it and sell it straight away. It means that wait for the common center line is broken and then implement a different time frame trading method. Usually, stochastic 833 will be overboard, common center is broken, you trade it like a pro. Price will be going down in a declining channel. Do not leave too much money on the table because sometimes trader will sell it at the top like this, and they are very happy and they jump away around and trade another useless financial instrument. It may form a lower high again, a common center is broken. It's yours again. Shut it down. All right, gently, gently. All right, gently, 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 gently. Don't get carried away. Don't get too excited and waste what you already gained. Gently, gently. Okay. All right. So have I said everything? You will see the same wick, all right, even on the weekly chart on a monthly chart, even on a yearly chart. These are just week two together like this. This was a little bit long. We would prefer it to be longer than that. Stochastic was overbought for too long. Now we have that week, all right, June. Now look at this one. This is a nice week again. And then when you see that this, you see, though the stochastic couldn't reach the overbought, it was overbought. Ask yourself, myself, okay, where are we? Is he at the resistance level? Look at those week here. Look at this one. It's a long, isn't it? Yeah, it's a week here. It's another week here. But the primary, this is a very aggressive bullish traders. Though we have 2 weeks here, the price didn't come down, you see. That's why I say to you, common sense line must be broken. So if you are using it in conjunction with the common sense line, you save you a lot of hassle. So though there was a week, the price never break that trend line, you see. It didn't break it there. It continued to go up. Yeah. But in the same zone, as it calmed down now, it formed again the same week, which means those who placed orders here to sell before, say now it came down, it's becoming bearish, they sold it again in the same zone, creating that week. Now, what do? Common central line must be broken. If you are forcing it down, be gentle. Sometimes traders sell on top like this. Be gentle, okay? Be gentle. Be gentle, or switch to weekly chart or another lower time frame. I'm on a weekly chart now. You may switch to the daily chart to manage the trend or use a different time frame trading method to spot it that it's going to come down. Have I managed to answer your question? All right. How to read wicks. All right. So again, we can use it on an hourly time frame. You can use it on a 30-minute time frame. Trader even use it on a 5-minute time frame. Those are scalpless. But as I told you, if you are using it on a lower time frame, use it on the edge of key levels from the higher time frame. If this video has been truly useful to you, please let us know by giving us your beautiful thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share with your friend, okay, on the social media, okay? To learn more about technical trading, go to www.stochastic-market. Follow us also on Facebook. My Facebook page is stochastic-market. More amazing tutorials are coming soon. Subscribe to our YouTube channel today. My YouTube channel is 24 Stock Trader. Digit 2, digit 4 Stock Trader. Be sure to click on the notification bell, as they say, ring the bell. And so anytime we record a new video, you will be the first person to be notified. If you have any question, suggestion, recommendation, complaint, lamentation, feel free to put in the comment section, and in due course, I will be recording another video to answer your specific question. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to read wicks. So if you say, Joe, this is amazing channel, feel free to talk about us to your friend on Twitter, on Facebook. Say, I found a very good channel. I will encourage you to subscribe to our channel because this is a new channel. Our goal this year is to reach 1,000 subscribers. We are now at 800. Is it 800 or 700? All right. So help us to reach our 1,000 goal for subscribers on our YouTube channel. That will be amazing so we can all celebrate. Thank you for watching, and I will speak to you soon. Happy trading to you all.